Good morning, I'm Maiki Oreta, and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. The country's economic managers remain optimistic, believing that the current political turmoil will not impact the economy. The Philippine Stock Exchange lowers its capital raising target for 2025, reflecting a cautious market sentiment. The Agriculture Department temporarily bans imports of poultry products from California following a bird flu outbreak in the U.S. state. According to the latest data from the Civil Aeronautics Board, the Gokongwei family Cebu Pacific remains the leading domestic airline. First, a look at the financial markets. Now, shares in Europe tick up, boosted by a rally in tech stocks. This comes after Bloomberg reported that the Biden administration's curb on Chinese chips could be less severe than expected. Germany's DAX led the gains, rising nearly 0.9%. Here in the Asia Pacific, markets opened lower in early trade. South Korea's Kospi led the losses after the country's industrial production saw a 2.3% increase year-on-year in October, that is, a rebound from the 1.3% decline in September. Investors are also assessing Tokyo's November inflation rate, which came in at 2.6%, a recovery from October's 1.8%. Meanwhile, Wall Street is closed today for the Thanksgiving holiday. The country's economic managers remain optimistic, believing that the current political turmoil will have little impact on the economy. NEDA Secretary Arsenio Balisacan notes that the Philippines has overcome multiple political challenges since the late 1990s, remaining resilient thanks to sound and stable economic policies.
Business as usual for us, and I don't think that these political noises would have any impact on the economy. What is important is that our economic policies, our economic the policy directions are sound and sustained. In this administration, we are so focused on and ensuring that the goals and targets and strategies that we have outlined in the Philippine Development Plan are and will be achieved. And that's what is important for the broad public to signal that the economic momentum is sustained.
Balisacan made these remarks as President Bongbong Marcos met with his economic team on Thursday. Also in attendance were House Speaker Martin Romualdez and Senate President Chiz Escudero. Government officials are praising the recent move by the S&P Global to upgrade the Philippines' credit rating outlook. However, a former central bank governor warns that political instability could undermine the country's growth. Sujin Kim has the details.
The country's economic managers laud the credit rating upgrade by Standard & Poor or S&P Global from stable to positive. According to S&P, this could signal the Philippines can achieve an A- credit rating within 2 years.
Maybe realistically in 2 years' time we'll get an A rating if everything goes well. Okay, assuming no external developments, adverse external developments.
But Monetary Board member and former central bank governor Ben Diokno also warned that political instability could hamper this goal. Despite this, the government reaffirms its commitment to achieving an A rating. Finance Secretary Ralph Recto, for his part, considers this a big win. He says it could reduce the country's borrowing costs, which would benefit the economy. S&P also highlighted the country's solid economic outlook driven by infrastructure projects and business-friendly policies. From January to September this year, the government allocated over 1 trillion pesos to infrastructure projects, an 11.9% increase compared to 2023.
In terms of infrastructure development, we've been very consistent that we will spend 5 to 6% of GDP, if not higher, on our spending priorities. We still spend for our social infrastructure more than the hard infrastructure.
The Japan International Cooperation Agency viewed the outlook upgrade as a good sign and an uplifting development.
But as you know, among the 5 credit rating companies in the world, there are 2 Japanese credit rating companies. One is JCR, one is R&I. They are already granting grade A. So I believe current good change or sign of the better credit rating is very natural.
Sakamoto expressed confidence that the improved credit outlook would further boost collaborations between the public and private sectors.
The credit rating change is a very happy news for everybody, including for JICA, because JICA is in a position to encourage more, FDIs, foreign direct investment, because we are supporting so many big ticket projects like the infrastructure, railways, or disaster risk reduction, and so on.
However, S&P warned that a reversal to a stable outlook is possible if fiscal and debt positions weaken. Sujin Kim, BNC.
On the equities front, the Philippine Stock Exchange tempers its expectations for 2025, citing concerns over global headwinds, including political and trade uncertainties, which could weigh on investor sentiment and limit capital raising activities in the financial markets. After predicting a fundraising target of after forecasting a target of 150 billion pesos last October, the PSE now expects to raise only 120 billion pesos in 2025. This adjustment comes as U.S. President-elect Donald Trump's protectionist policies and escalating geopolitical tensions under Trump 2.0 are keeping investors on edge globally and away from emerging markets. GCash is reportedly inviting banks to pitch for an initial public offering in Manila with plans to raise up to $1.5 billion. According to a Bloomberg report, the company, the Philippines' largest fintech platform, aims to list in the second half of 2025. If successful, this IPO could become the largest in the country's history. The move is expected to be a significant boost for Southeast Asia's equity capital markets, which have struggled in recent years amid rising interest rates and lower activity. Now, the Department of Agriculture temporarily bans imports of poultry products from California following a bird flu outbreak in the state. The outbreak was confirmed on October 25th. However, the DA says it will still allow imports of products processed or slaughtered before October 11th, provided they are accompanied by valid import permits. Meanwhile, the ban on poultry imports from Minnesota has been lifted as no new bird flu outbreaks have been recorded in the state. The ban on pork products from Sweden has also been lifted, with authorities confirming no new cases of African swine fever in the country. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line.
Magandang gabi, ako si Corina Sanchez Rojas.
Magandang gabi, ako po si Pinky Webb.
Simulan na natin ang agenda.
Nasa radyo na, mapapanood, mapapakinggan.
94.7 FM.
Nahaharap ngayon ang Estados Unidos sa isa na namang 4 na taong Trump presidency.
Death squad rin yan. Binawi niya yung sinabi niya.
Ing masalimuot ang buwan ng Oktubre para sa ilang bilyonaryo.
Sa bawat issue may anggulo at ang balita may agenda.
Good morning, everyone!
Let's begin your morning with these people that gives you the hottest information.
We're happy to share with you some magic that will make you smile, dance, and feel the love.
With excitement and fun to start your day.
It's a light of the morning with positivity, joy, and a sprinkle, a dash of fun.
Join Paulo Del Rosario, Ann Asis Carrillo, and Monique Tuzon.
Ready to start our day with a smile.
It's a beautiful day.
Welcome back to Basis Points Trading at the Philippine Stock Exchange. Opened just a few minutes ago. Let's take a look at the initial figures. Right now at 9:43 this morning, the PSE index is slightly in the green, up by 0.3% to 6660. This after dropping 1% yesterday to finish at 6639. Again, the PSE index is at 6660, up by 0.3%. The broader all shares index mirroring the gains in the main index, up by 0.3% as well to 3747. Out of the sub indices, all are trading in the green except for the financials, services, and mining and oil counters. It's worth mentioning that the property counter right now is bucking, it's not bucking the market downtrend, is higher sharply, up by 1.6%, whereas the main gauge is up by just 0.3%. So we're seeing a lot of buying activity in the property counter this morning. And at the foreign exchange market, the peso opened stronger against the greenback. It opened at 58.66 compared to its previous close of 58.67. The central bank is not ruling out the possibility of the peso hitting a new record low of 60 to a dollar. The SP Governor Eli Romolona says such a scenario could occur, but the central bank wants to adjust to be orderly and not sudden. Rather, wants the adjustment to be orderly and not sudden. The peso has dropped this month after Donald Trump's election victory pushed the dollar higher as investors expressed concerns over his trade policies. So far, the decline has been capped at a record low of 59 pesos to the greenback. Romolona says he's comfortable with the peso's current level and adds that its movement won't be a factor in monetary policy just yet. Now, to help us make sense of everything that's going on, we're now joined on the line by PhilStock's Financial Research Manager, Japet Tantiangco. Hi, Japet. Welcome back to the show.
Good morning, Ms. Maiki. Thank you very much for inviting me.
Okay, so Japet, the PSE just lowered its capital raising target from a forecast of 150 billion pesos in October to just recently to 120 billion pesos today, apart from the cautious market sentiment. What does this tell you?
Well, what this tells us is this is from PSE, and it just tells us that PSE is expecting things to be less better moving forward. I believe that when they gave that previous projection, that was a time wherein President Trump or Mr. Donald Trump hasn't been elected as president yet, but I believe he's the game changer right now, which explains the downward revision in the capital raising projections. The election of President Donald Trump it does give or it does weigh on the global economic outlook, and this in turn weighs on sentiment, which in turn explains the lower projection with respect to the capital raising.
President-elect Donald Trump hasn't even been sworn in yet, and already he's making waves. The inauguration isn't until January 20th. That's going to take place in Washington, D.C. With this inauguration approaching, how much of the market's current volatility, the volatility in the global market, is on account of uncertainty over what President-elect Donald Trump is going to do in terms of policies?
Right now, as far as we can see, the policies or the planned policies of President-elect Donald Trump is playing a big role on the local markets movement. As we can see, the local market is currently moving with a downward bias, and this has been going since the election of President-elect Donald Trump, and it has worsened when the president-elect reiterated his policies to impose tariffs, especially on the likes of Mexico, Canada, and most crucial of them all, for the Philippines, at least China. I mean, because of these tariffs, we expect, of course, possible weakening of the global economy. At the same time, these tariffs is also affecting the Federal Reserve's policy outlook. The tariffs, as well as the other policies of President-elect Donald Trump, they are quite inflationary based on how we analyze it. And this in turn could slow down the Federal Reserve with respect to its policy easing. And that in turn is also going to affect the Bank Central ng Pilipinas with its policy making. And all of these are being taken into consideration in the market right now, which is why we are moving with a downward bias.
Ironically, Trump won the election against Kamala Harris because of inflation from 2021 to 2023. Yet all of Trump's policies are inflationary. The tariffs, the tax cuts, the deportations, they've got inflation written all over it. Plus his criticism of Federal Reserve Chairman Jerome Powell, that's casting a huge cloud of uncertainty. Interest rates, inflation, all really important for the financial markets. The Federal Open Market Committee is meeting on December 17 to 18, just before the BSP, strategically for us. What are your expectations for these rate-setting meetings? The BSP meets a day after the Federal Open Market Committee does. What are your expectations on what they're going to do, especially as BSP Governor Eli Remolona said that the weakness in the peso is not a concern for monetary policy right now?
Well, with respect to that, with respect to the BSP, we still expect them to be data-driven with respect to their policy decision making. And for that, we are looking into certain factors. Number one would be the performance of the general economy. So far, we've seen third quarter GDP, and it's been dismal. Growth has been at 5.2%, and this is a factor that could push the BSP to cut rates by their meeting on December. However, there are other factors that we have to look into. Number one would, aside from the GDP that we've seen, we're also going to look at how the Federal Reserve is going to move. If they are going to cut rates in their meeting by December, then that's also going to be another push factor for the BSP to cut their own. And finally, the inflation data, which the November inflation data, if it comes out and it's still within manageable levels, still within the government's target of 2 to 4%, especially if it's biased towards the lower end, which is 2%, then that will be another push factor for the BSP to cut policy rates by December.
Yeah, so we'll just be taking a wait-and-see stance and taking our cue from the FOMC meeting, which will just be a day before,
Yep.
the BSP meets. Trump's tariffs, the proposed tariffs on China, Mexico, and Canada have ripped through Asian equity markets, ours included. How do you expect these tariffs to affect global supply chains, particularly those involving Philippine exports?
Well, it's going to be critical for us as far as I can see, especially with respect to the planned tariffs against China. In economics, there's what you call there's this concept we call derived demand, which just tells us that how much of the input good is going to be demanded is dependent on how much of the output good where it is used is going to be demanded. So if you're going to apply it in this scenario, how much China is going to buy from the Philippines depends on how much the world is going to buy from China. And so if the tariffs will be implemented, then we expect, less demand for Chinese goods on the part of the US. And if those goods that was not sold to the US, if China is not, it will not be able to sell it to the other parts of the world, then generally speaking, there's going to be reduced demand for China's products. And if there's reduced demand for China's products, then there's also going to be reduced demand for the input goods from the Philippines. So that's going to be the direct effect of these tariffs. And of course, the indirect effect, weaker global trade, weaker global demand, and that's going to slow down the global economy, and that's going to have negative spillovers on the Philippines.
Now, we are a very interconnected world. Now, considering
Yes.
the risks tied to the U.S. trade policies, we're at 66.60 now. What is the next major technical support for the PSE index? And what are your year-end targets for 2024, all things considered?
Well, for now, we are basing since we're just a month to go. We're basing it on the technicals with respect to the market's movement. So right now the market has just reached it's 6768 support range. So today we're going to see if the market will be able to get back to that range. If it is able to do so, then that will remain as its support, whereas resistance will be at 7,000. However, if it fails to do so, Then the market's next major support is seen at 6.4. So that's the support that we're seeing. Towards the year end, it will depend on the narratives that we're going to see. Where currently we're fundamentally speaking, the market is still at bargain levels. Still a lot of bargain. It is at attractive levels. Still a lot of bargain hunting can be done. But then again, narratives will play a very important part. We're pinning our hopes right now on what the BSP will do. If the BSP does cut rates by their December meeting, then there's a possibility that the local market could at least get back to 7,000.
All right. Thank you for your insights into the market, Japet.
You're very much welcome.
That was Japet Tantiangco, Research Manager at PhilStocks Financial. Now, in other news, the Gokongwei family Cebu Pacific remains the leading domestic airline in the country. According to the Civil Aeronautics Board, the airline transported over 10.72 million passengers on Cebu Pacific flights in the first 9 months of the year and 1.7 million on CebGo, its affordable wing. Ranking second is PAL Express, the regional arm of Philippine Airlines owned by billionaire Lucio, which carried 6.5 million passengers. It was followed by AirAsia Philippines and PAL. The total number of domestic passengers increased by 8% to 23.6 million, a sign of the strong recovery of the aviation industry after the pandemic. This growth not only shows the rebound of travel demand, but also highlights the strength of the Philippines' domestic tourism sector, with Cebu Pacific leading the way. And that's it for Basis Points. I'm Maiki Oreta. We'll be back next week for more news on the financial markets and more. Keep it here on BNC, the Bilyonaryo news channel, always on top.